Welcome to part 2 of my 4-part series on the Affordable Care Act. I get a lot of tax questions every year, but this year the Affordable Care Act, commonly known as Obamacare, is topping the list of questions. Watch my video to hear one of the most frequently asked questions, and be sure to pay a visit later this month and next month for a continuation of this 4-part series.
Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with certified public accountant Tina Moe.
The Patient Protection and Affordable Care Act is by far one of the most complex reforms to our healthcare system, and whether you are pro or against it, it comes with rules you should know about or be prepared to pay an additional tax. In my first video of this 4-part series, I discussed the most frequently asked question, which is, how much is the penalty if I didn't have health insurance last year? If you missed that video, I encourage you to go back and give it a listen. In this video, I'm discussing the second most common question I get, and that is, what are the exemptions for the penalties? There are 2 types of exemptions you should know about, and they are regular exemptions and hardship exemptions. There are a lot of them and far too many to name and cover in this video, so I'm going to discuss some of the more common ones, but be sure to visit my website for a more detailed list of these exceptions. One of the most common reasons for the exemption is for those taxpayers that cannot afford health insurance coverage. A person can be exempt from the penalty if the amount they are required to pay exceeds 8.05% of their household income. Please note, I said household income, which means taxpayer spouse and any children living in the home with earnings. Individuals with income below the filing threshold are also eligible for an exemption. If you don't have to file, you don't have to pay a penalty for not having health insurance. If an individual is incarcerated, they may also be eligible for the exception. Members of certain religious sects, citizens living abroad, and certain non-citizens may also be exempt. Taxpayers with a short coverage gap, meaning there was a period of less than 3 months without minimum essential coverage, may also qualify for the exemption. If you're eligible for an exemption and you're required to file a tax return, your exemption should be claimed on your tax return using Form 8965 with the corresponding exemption code. Please note, some exceptions require you to get your exemption granted by the marketplace. Go to healthcare.gov/exemptions to find out which exemption requires prior approval. You'll need to provide an exemption certificate number on Form 8965 if you're granted coverage exemption from the marketplace. Be sure to check back for part 3 of this 4-part series to learn more. Thanks for watching. Be sure to visit my website for more information on this tax topic and more at actservices-inc.com. And if you have a specific tax question, email it to me at the email address on your screen.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.